A couple of weeks ago, we have seen drama performed by big stars like the price war between Saudi Arabia and Russia to the interventions of Trump administrations and now the fuel productions cut of OPEC and OPEC+. What has gone wrong in their mind? Why do global investment banking companies like Goldman Sachs, Citigroup label price of oil to $10 is likely to happen? I have to say sadly, it's all about politics. It may sound uncomfortable to the West as by far as I know not many people know about the truth or aware about it since the media in the West cover up a lot of the informations. I want to say most of the research here are dug from foreign news sites. In 9th of March, US market collapse, especially the legendary Dow 30 made a scuba dive plunge of 2,000 points in a single day. The panic in market causes New York Stock Exchange trading to halt for 15 minutes for 3 times in total. This only happened once in the 2008 global financial crisis. Many people may not even aware such stop existed. It was known as trading curve. The definition given by Wikipedia is a trading curve, typically known as a circuit breaker in Wall Street parlance, is a financial regulatory instrument that is in place to prevent stock market crashes from occurring. At the start of each day, the New York Stock Exchange set 3 circuit breaker levels at levels of 7%, level 1, 13%, level 2, and 20%, level 3. The cheapest price available for oil now is $18 per barrel. What concept it is? A barrel of butter costs $50, per barrel of soda costs $134, per barrel of milk costs $301. You may be wondering, what about the cost of manufacturing of the tin barrel? That could possibly cost more than the oil itself.
Oh my God.
Don't be surprised. Why did Saudi Arabia and Russia start this war, and why did they select this moment, the 2020 coronavirus pandemic, this sensitive moment to start the war? Oil prices are never solely affected by supply and demand. These commodities are also driven by the power struggle of geopolitics. To understand this, let's take a bird view at the global exportations of oil. As of now, there are 3 main oil exportation countries. The United States of America, Saudi Arabia, who leads the OPEC, and Russia, who leads the non-OPEC. According to the statistics published by Market Realists, the United States holds a global market shares of 18%, or 19% from EIA.gov, the Saudi Arabia 12%, and the Russia's 11%. Adding all 3 of them together, they produce over an estimate of 42% of the global productions of the crude oil. Then OPEC and non-OPEC roughly over 40% respectively. Actually, everyone is making money happily, everyone couldn't care less of each other's. But don't forget, the stock market itself is an indicator of the future's economic health. Ever since coronavirus as a disastrous role comes into the play, countries like China, Italy, India announced a lockdown for the first time in human history. Japan announced emergency declarations, the United States stay-at-home order. When the top oil consumers countries like the United States, European Union, China, India, and Japan stopped using oil, this immediately reduced the demand of global oil consumptions, where over 69% of them are used on transportations, that's the vehicle and planes. In another word, an estimate of 30 million barrels of oil decline every single day. The OPEC boss, Saudi Arabia, thought of, hey, why not invite Russia for a talk? Let's cut production so we could get the price of oil controlled. At first, Saudi Arabia thought Russia would probably agree since low oil price doesn't benefit both of us. Let's endure the winter until the summer comes. But Russia gives a different response. They want to pick a fight instead. They knew it very much considering if I do a production cut now, but if the pandemic continues for months, production cuts doesn't make any profit in a way and another. Don't forget there's a big mob hate in the West, the United States. Cold War, defame, anti-Russians, and sanctions, you name it. And with the recent rises of the US shale oil company joining for a share cut, this is making things worse for them. Like, why in the world we cut production but you? The Russian goes, am I supposed to pay for the food and spoon feed you? Back in the 30s during World War II, when we were invaded by the Nazis, we don't even afraid of dying, we even performed the scorched earth policy, and now you're expecting us to sell ourselves off? United States of America, OPEC led by the Saudi Arabia, and non-OPEC led by Russia, all three of them have their own expectation and goal. We used to say it's not about strategic play, but the amount of ammunition you reserve. What I'm saying here is the cost of crude oil price. When you understand the logic of the production cost of crude oil of the country mentioned earlier, you will get to know the psychology behind them, why they get the guts to start the war. Saudi Arabia, blessed by their God Allah. This country is rich in oil, not a joke. It happened to anyone traveling there. Take a straw out of your pocket and just randomly step on the ground. Oil could have just spouted out from the ground like a fountain. The production costs of oil there are immensely low. According to a research made by MUFG Bank in 2016, Saudi Arabia low extraction costs averaging around $3 per barrel. Adding up transportation, that will barely cost less than $10 per barrel. Russia is a little bit more expensive, production cost is around $20. US shale oil company is even expensive at the rate of $50 to $55 per barrel. $10, $20, $55, this number is doubling up. If we look from the perspective on the production cost, Saudi Arabia and Russia has better advantage over United States. But the truth is actually opposite. Over 33 million of the population in Saudi Arabia, the Saudi royal families rely on oil exploitation as funding source. According to a research study shows, over 75% of Saudi Arabia revenue were made on top of oil exploitation. You may not know, oil production companies are controlled and owned by the royal families. All revenue made are funded directly to them. But the issue lies here. If it happened that the royal family only cares about their profit but the citizens, revolutions like Syria would have taken place long time ago. In order to prevent such event happens, citizens in the Saudi Arabia are offered free stuff like free education from primary to high school, free currency in cash, and extra payment for state employees. Sort of like socialism in Venezuela. The cost for such policies to survive require high spending. A research shows, in order the royal family to maintain the current lifestyle, $70 per barrel of oil is inevitable, otherwise they will face fiscal deficits. According to some financial analysts, the lowest price Saudi Arabia can sustain is $30 of oil per barrel and is only in a short period of time. Russia suffers the same issue as well, but not as serious as Saudi Arabia because they do not rely solely on oil exploitation. They also produce and sell weapons too. According to the Federal Customs Service (FSC), fossil fuel and crude oil accounted for as much as 63.2% of Russia's export in 2017. United States is an exception. US shale oil companies are individual companies which accounted only less than 3% of the country's GDP. They are excluded from the government budget. As we explained earlier, the production cost per barrel of oil for US shale oil company is $50 to $55. When the market price at $50 or above, US shale oil company would produce oil 24 hours 7 in the rocket speed. To take a bigger cut in the share market against other players, the OPEC and non-OPEC members. At the same time, US shale oil company are making money and the country's economy couldn't get affected by high oil price. That's like paying 1 cent for 3 gold mines. Russia, the smart nerd, he goes, I know your trick, I don't care, make money is my first priority. No, oil production company, no, you start producing oil, no holiday. Ironically, President Putin actually announced warning says oil production company are not allowed to stop, otherwise they will get fined. Saudi Arabia, the poor little chicken, if the market price surge, they lose market share. If the market price plunge, they aren't earning any money. It's like a poor little chicken waiting to be cooked. Now they don't care, either chicken to be cooked or chicken to freedom. Saudi Arabia make a huge step, they decide to flood the market with oil. As of now, April 17, the price of crude oil is already $18 per barrel. As the price of oil went down, a lot of the oil producing countries followed the footsteps of Saudi Arabia. Nigeria, for example, selling at a reported discount rate of $3 per barrel. But I believe that the price of oil aren't going anywhere down below $20 for long. My thought is, if this price sustains, Saudi Arabia could be the first one to lift his white flag. But it seems it wasn't the case right now. It seems that US shale oil companies started the white flag first. Just recently, one of the top US shale oil company named Whiting Petroleum Corporation filed for bankruptcy. As reported by Energy Information Administration's EIA and several associations, the inventory for oil around the globe are almost fully filled. Some reported that the crude oil that are under shipment are forced to stop by the harbor until the inventory are clear. And Saudi Arabia are still flooding millions of barrels of oil to the United States and the globe, even today. Actually, the United States and Saudi Arabia are allies. Saudi Arabia was known well as a term called puppet. Whenever the price of oil went up too high, United States would give a phone call saying, "Hey, little bro, please increase the production line. The price of crude oil now is too high." And ask for production cut when the price is too low. This all changed at the rise of US shale oil company in 2014. Psychologically, Saudi Arabia would think it this way. Hey, I buy and follow all your order to protect your interest. Oil exportation is my only source of income. Now you are dumping me? The worst has yet to come. In 2016, the House passed a bill allowing 9/11 lawsuit against Saudi Arabia, stated whoever found their family members being victimized as part of the incident of 9/11, they are allowed to claim compensation to whoever felt who threatened their family back then, including the government officials. A rumor circulating on the net says Saudi Arabia were forced to sell over $750 billion worth of bond to pay the claimant. This event triggered a huge reaction in the Saudi royal family. The United States ex-President Obama managed to coup both parties and close the case. To put it bluntly, United States has created a lot of enemies over the years, especially when President Trump was elected. He imposed a lot of tariff and restriction across Middle East and Asia countries, like the trade war between China, proxy war in Venezuela between the US and Russia, ignoring the funding request by Abe Shinzo, the Japan's Prime Minister, which given an opportunity or excuses for them to unite. Enemies is my friend. That's happening now. Now you will be questioning, where do Russia has the gut to start a price war with the Saudi Arabia if the production cost is $20 per barrel? That's because Russia boasted they could survive with $25 of oil for years. No, it wasn't. That's because Russia has a 30 years contract of the purchase of natural gas and crude oil at a premium price. That contract alone worth $400 billion. And the buyer is China. Ironically, contracts are finalized in petrol yuan instead of petrol dollars. The contract was signed in 2014 when Russia got another sanction placed by the United States. It's really the comeback of bullying the weaks. Down to root, US shale oil company aren't really making money actually. It was created for more job opportunities since the price of oil declined ever since they started in 2014. Actually, it's a very tough decision for the Saudi Arab to start this war. Why? We need to start on understanding the world reserve currency first. A simple logic here, when there's a mass acknowledge and uses a certain currency, that currency will be appreciated and this currency printing company will be benefited too. Yes, I'm talking about the US dollar. For many years, United States has continued its mission to make US dollars the world reserve currency. This is a very vast topic. If you happen to have extra time, I suggest you watching videos from Mike Maloney from Gold Silver. I'll put a link on the description box. Great video with animations. Back to the topic. After the end of World War II, every country in the world are suffering from the aftermath of the war but the United States. Because of its geographic position, side by Big C and a friendly allies is a neighbor, Canada. Not to mention, during World War II, the United States made loads of money in selling weapons, piling up their reserve in gold. In 1945, the gathering of 730 delegates from all 44 allied nations at Mount Washington's Hotel, situated in Bretton Woods, closed in a small room making wishes that are offered from a genie in a bottle. I mean selecting a world leader. During that moment, United States has the world's largest gold reserve. It was estimated they owned over $20 billion worth of gold, where the British Empire only had $1.9 billion worth of gold. The total gold reserve United States owns accounted over 2/3 of the world gold reserve. The United States goes, hey, none of you has better gold reserve than I. From now on, I introduce you the US dollar gold pack. Then your country currency get pegged to US dollar. Helplessly, to be able to trade with the United States, other countries have no choice but to bow their head. A new monetary system is created, named the Bretton Woods system. The US dollar hegemony is born. A note here, in Bretton Woods system, you are able to exchange your currency to gold on spot, in the bank. $35 for an ounce of gold. Frankly, United States has the world's largest gold reserve. The go out on my backyard. Rushed by the greed for more power, the United States started the Vietnam War in 1955. A mass spending results a mass sell-off of gold. The rise of Europe and Japan causes a depreciation on US dollar. People all over the world are afraid of their currency are no longer worthy. They flood the bank to get the currency exchange back for gold. At the same time, the United States were printing more currency than ever despite a coming hyperinflation. The US dollar was likely to fall very soon. In March 1971, United States announced,
I have directed Secretary Connally to suspend temporarily the convertibility of the dollar into gold or other reserve assets.
Gold prices are no longer at fixed but floating rate according to market's condition. That means gold are no longer $35 per ounce. The Bretton Woods system collapsed. But President Richard Nixon saw once in a lifetime that changes the whole life of other lives in the planet opportunity. He saw a solid currency, crude oil. Crude oil is the largest consumable commodity in the world and is traded in a large volume, huge transaction every single day, insanely huge. Take a look at this picture. Gold are traded in a transaction record of $170 billion per year. With other commodities combined altogether, none beat the total transaction made for crude oil, $1.72 trillion. That's only 1/10 of yearly transaction for gold. Crude oil are not only a commodity itself, but it's like counterfeit legit check and bond created by the Fed government, spreading them all over the world. As explained earlier, the impossible mission for United States is making US dollar the world reserve currency. A famous quote from the former United States Secretary of State Henry Kissinger says, "Control oil and you control the nation. Control food and you control the people." The market of crude oil are unimaginably big. After the fall of Bretton Woods system, the United States accidentally found a very accidental opportunity. Crude oil, the big market. Such accidental coincidence. In 1974, the United States found the OPEC's boss, Saudi Arabia. The United States goes, "Brother Arab, I hope Middle East are filled with donkeys, but it's not. You see, it's immensely dangerous to produce oil without defense, right? Let me help you. I will send spaceship and invincible ghost force to protect you. Your job is to stay at home, swim 24 hours 7 with all the currency you've earned while producing oil." The Saudi Arab goes, "This must be a gift from Allah. Thank you, Allah." Then the United States goes, "Ahaha, there's one small condition. Every transaction made from whatsoever country in the world must be finalized in US dollars." Saudi Arab goes, "What's that? Who cares?" This is how the petrodollar existed, the return of US dollar hegemony, and it's getting stronger than ever. Now it's a show time for US dollar. How US dollar take advantage of its hegemony to make everyone look donkeys in the world? Let's continue the talk we have left earlier. Since Saudi Arabia agreed on every transaction made on oil are paid in US dollar, and they were the oil exportation country. In another word, Saudi Arabia got rich overnight for making a huge amount of dollars in terms of trade surplus. What is trade surplus? Simply mean the money you make on exportation are greater than the cost of import, or the things you buy. Now, the Saudi Arabia kingdom was flooded with US dollar notes. What were they gonna do with the notes? Saudi Arabia thought of, we can buy some of the US debt to help America. Note here, US debt is the national debt of the United States, which is sellable like a bond by the US Treasury in promise for a return like yield or interest rate. In another word, it's money in the future given to the US Treasury in exchange for a payback in later years. But by the time you get payback, inflation arises, your currency are not worthy anymore. For oil exportation countries like Saudi Arabia are not an issue. But how about other country who wants to buy crude oil from Saudi Arabia? They goes, we don't have US dollar, we can't buy crude oil. Every single transaction must be finalized in dollar. This is where US dollar hegemony comes into play. If they want to buy crude oil, they first need to earn US dollars and reserve that for additional importation in the future. Did you notice that? The demand and the value of US dollars are made out of thin air. That concludes one fact. Every country in the world who wants to trade with the United States must first have dollars note on their hand. You might be questioning right now, why not exchange the currency to US dollar directly so they can buy the oil? The answer lies on purchasing power. Imagine you are traveling to Thailand where $10 could bring you a luxury life like buying 50 pack of burgers. But back to United States, the $10 could only buy you a McD value meal. That means the US Fed government made everyone look donkey by printing counted licensed currency notes. And they are the only central bank in the world who are licensed to do it. Of course, the US Fed government cannot print unlimited currency, there's a limit. In case if the dollar reserve in the world return to United States, could result in hyperinflation like Venezuela and Weimar Germany in 1920s. Even irony, the complex monetary system from the Fed make leverage possible to stop this bug from happening. Say an Apple worth $1 can be leveraged up to $100 on their bank system. Take a random guy for example. This random guy had a saving of $20,000 and looking for loans in order to buy a house. A down payment was made. You probably proven yourself you are able to pay the loan by a wages record, a mortgage, or other proofs to get the lending of $100,000 approved. For the likes like this random guy being multiplied, they are able to loan more and more and more of the $100,000. With good credit score, you are able to jack up more money from the bank. By abusing this exploit, the central bank are able to create liquidations of money circulation flowing back to market to prevent excessive returns of US dollar notes. Have you heard of printing currency in your house and make it spendable? United States, the Fed government did for a century long. So the process repeat. The Wall Street are funded by the Fed government continue printing legitimate dollar note to buy and spend and invest on other countries. According to analysts, this is an act of revenge from the Russia on impose of economic sanctions by the United States. Russia has been cleared out most of the US dollar from their reserve, and they have been aggressively piling up gold in recent years. I guess they're expecting a similar monetary system like Bretton Woods system are about to rise again. If it happened that the alliance between the United States and Saudi Arab collapse, this may result a possibility of the collapse of petrodollar, and soon the existing monetary system will be replaced again. The interesting fact now is many oil exporting countries started to finalize its transaction in yuan, especially after the price war has engaged. Countries like Saudi Arab and Russia are among them. Let's take a look at the timeline what has happened over the past few weeks. March 9, Saudi Arabia and Russia started the price war. Both parties, OPEC and OPEC Plus, increased production output. Oil crash, oil falls $14 or 23% in a single day. Market crash, investors and banks were panicked, they cashed their currency out. Gold and silver IOU plunged 40%. Both parties continue increasing exports. March 19, Trump first intervened. US bought 30 million barrels of oil for emergency stockpile, resulting a spike. Both parties continue to increase export and storage for oil is getting limited. A bunch of rumors and promises made by Russia saying cheap oil hurts our economy. March 23rd, the Fed government announced quantitative easing infinity or QE infinity, buying back private assets, stocks, treasury debts, and mortgage-backed securities. In another word, the rich bailing out the rich. 2nd of April, Trump second intervened. Bloomberg reported China is piling up cheap oil for strategic reserve, sourced by Anonymous. You know what? I did a search on China website. They had been building extra storage and buying oil for weeks before reported by them, Bloomberg. Trump made a fake tweet claim. Just spoke to my friend MBS Crown Prince of Saudi Arabia, who spoke with President Putin of Russia, and I expect and hope that they will be cutting back approximately 10 million barrels per day, and maybe substantially more, which, if it happened, it would be great for the oil and gas industry. Oil price surged over 20%. 8th of April, Algeria says OPEC Plus cut could reach 10 million barrels per day. 9th of April, the OPEC and the OPEC Plus meeting made an agreement of production cut of 10 million barrels per day, but hard to cut because Mexico couldn't agree for a 400,000 cut. They goes, we can only do a 100,000 cuts, and the United States goes, we are offering a voluntary cut of 250,000 cuts to help fill the gap. Who is paying for the Mexico war? 13th of April, Trump tried to intervene. Hours before market open, OPEC and OPEC Plus finalized the agreement on the production cut of 9.7 million barrels starting from May, 9.7 million barrels per day from May 1 to June 30, then by 7.7 million barrels per day from July 1 to December 31, and 5.8 million barrels per day from January 1st, 2021 to April 30, 2022. Less than expected. Actually, they didn't really did any cut, they just revert back the numbers before the price war even started. Trump made a tweet to try to intervene. Having been involved in the negotiation, to put it mildly, the number that OPEC Plus is looking to cut is 20 million barrels a day, not the 10 million that is generally being reported. If anything near this happens and the world gets back to business from the COVID-19. Some people question why don't Trump impose tariff on importing oils? Well, ever since the United States transformed themselves from an importing role to exporting, tariff will barely cause any movement in the market. At least I don't see a thing. Another question is that why don't United States themselves do a production cut but insisting others to do so? The US shale oil companies are private property and are not controlled by the government unless voluntary. Otherwise, actually they have been saying they would do a voluntary cut, but it has been weeks already now, have yet to see any update from them. A few days earlier, news reported, quote, the Trump administration is considered paying US oil producers to leave crude in the ground to help alleviate a glut that has caused price to plummet and push some driller into bankruptcy. That's not likely to happen. Mr. President Trump has asked for money many times already and his request did not get called after the fourth time. What do I think the lowest price for oil? My initial thought of this was $17.50 simply because the production cost for the US shale oil companies averaging at $52.50. And now my estimation is no less than $8. It won't stay here for long for sure though. An update here since I can't redo the whole video from scratch, as April 21st is a settlement date for the contract of May 20 crude oil. The price of crude oil May contract closed at negative $37. It seems Russia and Saudi Arabia not only wanted to bring the oil price down, but oh well, conspiracy. Actually, they have been enduring this for decades. I understand what they think though. It's not always the supply and demand issue. The market responds more on United States, Saudi Arabia and Russia's action than the inventory report itself. So here you will get the picture of what pushes the crude oil price more. I don't think the price of crude oil will go up until September, October, since we have yet to see any slowdown for the coronavirus. The second wave of coronavirus is likely to hit the China again. So it's likely to bounce around $10 to $25 range in the coming months. And I believe the price of oil will unlikely to go up more than $50 this and next year if United States get into the stage of the Great Recessions. I might be updating more of crude oil news in near future if something big is happening. It's a disaster that the crude oil price closed at negative $37. This may result in hyperinflation and the collapse of the US economy in near future if this price sustains for coming months, mainly because of the possibility of the collapse of petrodollar. Thank you for watching and good luck trading.